Uh, Hello and welcome to In Plain English, where we're going to talk about complicated concepts in as simple terms as possible. So this week I'm going to talk about the blockchain, which most of you know more as Bitcoin. There are actually two separate things, but Bitcoin is an example of blockchain usage, and it hit record levels this week and has been all year. So it's actually almost up over 11,500 right now, and it was at 740 at the start of the year. So it's had quite a dramatic increase, and it's garnered a lot of attention. So Bitcoin is not a blockchain. It's an example of what blockchain is, and it's probably the best well-known example. So we're going to talk about kind of what's behind Bitcoin and how it works. So in order to do that, we're going to talk about, to start off, just your relationship that you currently have with a bank. So there's you and your bank, and you both have a ledger with your name on it. You would balance your checkbook or whatever, and you have an accounting of how much money you have, as does your bank. And you exchange money back and forth, and each adjust your ledgers accordingly, and that determines how much money you have to your name. So say you have $1,000 to your name. Now, the problem with that is that if there is a dispute, say you claim to have made a payment to the bank, but the bank didn't record it on their ledger, then you would have in your mind, say, minus $200, and the bank would not have that. So ultimately, the bank is the one that has the power. This is kind of the master ledger, and that's going to determine what happens. You can argue and try to fight and prove, and if you can prove that you had your $200 sent, then you might be able to get it back. But ultimately, the bank is the one in charge, so these guys have all the power. The same thing goes if, supposing you want to send money to your friend, we'll call him Ben. So instead of sending Ben, say, $100 directly, what you do is you tell your bank, essentially, that you want to send $100 to Ben. Your bank goes through kind of a system of banks and ultimately gets to Ben's bank, and everybody adjusts their ledgers accordingly, and then Ben's bank pays him $100 and Ben adjusts his ledger. So you now have a ledger saying minus $100, Ben has a ledger saying plus $100, and you've just paid Ben $100 through this very circuitous route. And again, that's working fine, and it has been working for centuries, but the ultimate problem is that all of the master ledgers are held within this banking network. And so they're ultimately the ones that are going to determine who has how much money. Now, in the blockchain, and again, finance is only one example of blockchain. You can use it in multiple fields, but this is the best known example. But in a blockchain, if you wanted to send $100 to Ben, what you do is you have your ledger, and everyone else who's agreed to be part of this blockchain has a ledger. So there's now a group of really hundreds of people that all have this same common ledger. And that is ultimately what a blockchain is an agreed upon set of transactions by everybody in the group. So when you say you're going to send your $100, as opposed to telling the bank up here, what you do is you broadcast it, and you put a little flag up saying, I'm going to send $100 to Ben. So you tell everybody in the blockchain that that's your plan, including Ben, and everyone ultimately puts that little mark on their ledger, and we all agree that now everyone in the group knows that your ledger is minus 100 and Ben's ledger is plus 100. And you just sent $100 to Ben. And there is no bank involved. They don't have to be involved because everybody is keeping the same communal ledger. So that is, in essence, what the blockchain is an agreed upon set of ledgers. Now, why is it called a blockchain if it's just really just a group of one common document? And the reason for that is that every time you set up this transaction, we'll get a little more complex here, but your little transaction flag that says you want to send $100 to Ben, because you could, in theory, only have $100 to your name, and say you owe $100 to Ben, and you owe $100 to this person, and $100 to this person. So you're going to trick the system and send up 3 flags all at the same time, saying, I'm giving my $100 to these 3 different people. How would it possibly know if there's no bank and no oversight authority to say, no, you don't have that $100? So what happens is that when this first flag is sent up, there is a group of people or processors called miners, and what they do is this flag has a digital signature attached to it, and it's the same concept as if you'd written out a check, and you have your signature down at the bottom, and you have a bunch of handwriting experts that analyze that signature with a magnifying glass and make sure that that is your signature and the check is valid and it's going to Ben. So you have these group of people called miners who are really just inspecting this digital signature up here. And that takes energy, it takes effort, it takes processing power. So these miners get paid for doing that, and they get paid a certain percentage of a transaction. So they're incentivized to continue to do this. But as soon as they verify that this is a correct check, for lack of a better term, that this is a correct flag, then they will add it to the common ledger. And they group the most recent transactions into a single block, and that block gets added to an ever-growing list of previously done transactions that is shared with everyone in the group. So this is all part of the one common ledger that we referenced up here, and it just continues growing. And each time one of these blocks is added to the chain of blocks, and it can only be added in one direction. You can't take this latest block and throw it back at the beginning. It can only get added to the end of the chain. And so what that does is it establishes a time frame so that you can recognize who has what money when. So if back here you try to cheat and send up these 3 flags up here, then the first one will be solved by the miners, and then it's added, so it's added to the block down here, and in this transaction, you now are on everybody's record as having minus $100 that you paid to Ben. So when they try to solve this second transaction, your second flag, it's going to go in a different block, and all of a sudden, when they try to add that block here, it's not verified because you don't have that $100 anymore. And that's been agreed upon in this common ledger here. So your second flag and third flag will be invalidated. So these people don't get paid because you don't have the money to pay it. And that is the concept behind the blockchain, is that it's a group of people, community, that's constantly checking and updating each other's ledgers. So it's a constant updating process and a constant checking and verification process. And that's it. That's the blockchain in simple terms. Thanks for watching. Please remember to like, comment, and subscribe. Let me know if there's any other concepts that you'd like to deal with on this channel. I appreciate your feedback. Thanks.